Hello, my name is Maarten Ackerman and I'm with Citadel Asset Management. Today I would like to talk to you about globalization conundrum. To put that into perspective, the age of our planet is about 4.5 billion years, and we as humans been around for about 200,000 years. Now, if we talk about the phenomenon of globalization, we're basically talking about the past 35 years. And yet, despite the fact that we've seen many benefits from globalization, it seems that this period is coming to an end quite fast. So if we talk about globalization, it's basically talking about the fact that over the past 35 years, we've seen a much bigger integration between different countries around the world. On the back of that, we've seen more efficiencies in production, we've seen lower cost production, we've seen a doubling of the labor force, and as a result of all of that, we've seen higher economic growth. But despite these massive tailwinds, it seems that currently a lot of those are turning into headwinds. So if we quickly talk about some of the evil offsprings of globalization, what are we talking about? So if we go back to the fact that China joined the World Trade Organization about 2000, since then we've seen many more labor entering the market, and on the back of that we've seen cheaper production. Now this trend of more labor obviously resulted that labor globally had less competitive power in terms of negotiating for real wages. So we've seen a decline in real wages around the world over this period. Also on the back of that, we've seen unemployment increasing. We talk about technological unemployment, where a lot of manufacturing being outsourced to machines and technological advances, costing a lot of jobs. So we've seen actually an increase in production and supply of goods and services, yet the demand for these goods and services actually declined on the back of more people being out of a job and those with a job actually not keeping up in terms of real wages. This decline in demand actually resulted in disinflation and eventually deflation in many countries around the world. On the back of these kind of trends, we've seen most central banks around the world actually greeting these kind of challenges with more and more stimulus, and we've seen interest rates around the world decline to an all-time low. During the financial crisis in 2008, obviously with the stimulus that's been announced by a lot of central banks at the time, this just pushed all of these levels of interest rates to the levels we are seeing today, which is close to all-time lows. On the back of this phenomenon, also another evil offspring of globalization is the fact that inequality, the gap between the rich and the poor globally, has increased dramatically, and today is a massive threat for the global economy going forward. Some other things we can talk about is the fact that globalization resulted in more mobility of people around the world. As a result of that, we've seen faster spreading of viruses and also resistance against antibiotics. So despite the original tailwinds that we've seen from globalization, we are currently starting to face some severe headwinds. We're already seeing the landscape changing. You can just think about all the talk currently about currency wars, where local countries are trying to remain more competitive by managing their currencies. We see more leftist policies, socialistic tension and social tension all around the world, and even close to our own home, xenophobia that's sticking its head out. All of those is an indication that the society around the world is trying to make a difference and reverse some of these evils that's been as a result of globalization. Currently, I think one of the best examples is what's happening in Greece, and this is also probably one of the biggest headwinds for Europe as a union going forward. The fact that they tried to be a union on the back of globalization, having a central union, a central currency, yet today they're facing some of those headwinds going forward to keep it all together on the back of a lot of social tension, given the increase in inequality also in that part of the world. What does this all mean for investors, for us, in terms of investment returns going forward? I think it's very important to understand that we're likely to face much more moderate returns going forward. Through the phase of globalization, most asset classes benefited. Equities benefited on the back of globalization, on the back of the high economic growth that we've experienced, on the back of lower interest rates during this period. We've seen fixed income assets generating significantly better returns, in real space at least, compared to the long-term averages. And where we are today, the expectation is that rates are likely to remain lower for longer, but there's a likelihood that rates will slowly normalize given the continuation of the expansion in the global economy. On that basis, We cannot expect the same kind of returns, real returns from global fixed income assets, and we are likely to see some capital losses over the next couple of years. So where we are currently facing some of these headwinds as globalization is running into more challenges, we should expect more moderate returns from most asset classes, definitely from fixed income asset classes. And for any investor in a global multi-asset portfolio, you should rather expect returns closer to 2.5% to 3% real after all costs and taxes. Until next time, goodbye.